You let him try violin because you love him. And if you love him that much, love him enough to make sure he's buckled up and in the back seat. Find out more at nhtsa.gov/the right seat. Brought to you by the National Highway Traffic Safety Administration and the Ad Council.
You're listening to Numbers by Barron's. It's Tuesday, August 17th. I'm Nick Jasinski, and I'm here with the numbers you need to navigate the markets this morning. Our first number is 50%. That's roughly what an index of U.S. retail stocks has returned since the start of 2021. It's about 2.5 times the S&P 500's return this year. Consumers are flush with cash from pandemic savings and government stimulus. Meanwhile, many in-person experiences like international vacations and live shows are still hampered by the pandemic. Combine those two factors, and investors have been betting on more spending on physical goods and products. Compared with spring 2020's harsh COVID-19 lockdowns, retailers should show red-hot growth in the second quarter. Many notable companies in the space report earnings in the next few days. Walmart and Home Depot are today's retail earnings highlights. Lowe's, Target, and TJX report tomorrow, followed by Kohl's, Macy's, BJ's Wholesale, and L Brands on Thursday. Foot Locker closes the week on Friday. The next number up is more than $300 billion. That's the value of Berkshire Hathaway's stock portfolio. Warren Buffett's holding company is a big investor in publicly traded stocks, in addition to owning numerous businesses outright. But as of late, the notoriously value-focused Oracle of Omaha has not been an eager buyer of stocks. Berkshire has been a net seller in 4 of the past 5 quarters. It seems Buffett isn't able to find obvious bargains in the market these days. One exemption, though: Berkshire's own stock. The company has bought back more than $30 billion of stock over the past year. That reduces the number of shares outstanding and means each remaining share represents a larger stake in the company. Our last number is 50. That's how many years ago this week that President Richard Nixon ended the US dollar's convertibility with gold. It ushered in a new era for the currency, which remains the world's dominant medium of exchange for trade, finance, and as a store of value. Under the Bretton Woods system agreed to in 1944, currency exchange rates were fixed relative to the dollar, which in turn was exchangeable for gold at a fixed $35 an ounce. But Nixon did away with that, and since then the world's monetary system has consisted of mostly freely floating currencies. Today, 50 years later, cryptocurrencies are the next big thing. That includes both the likes of Bitcoin, which by design is separate from any institution or authority, and CBDCs, or central bank digital currencies. The People's Bank of China is furthest ahead there, but the Federal Reserve and European Central Bank are also experimenting. And that's Numbers by Barron's for Tuesday, August 17th. I'm Nick Jasinski, and we'll be back with more numbers you need to know tomorrow. Have a great day.